Can $100 really become $10,000 by 2026? Today we're revealing 10 space tech stocks under $5 that could launch your portfolio sky high. Space tech is booming with satellites, rockets, and lunar missions fueling a projected $1.8 trillion industry by 2035. Whether you're a beginner or a bold investor, this is your ticket to the space tech revolution. Smash that like button, subscribe, and let's dive in. Let's launch into it. Why space tech penny stocks? The space industry is exploding, with private companies like Rocket Lab and AST SpaceMobile leading the charge. Analysts predict the space economy will grow 30% annually by 2026, driven by NASA contracts and global demand for satellite connectivity. Penny stocks under $5 can skyrocket on big deals or launch milestones, but they're high risk, high reward. Volatility is huge, so do your own research. Stick around for our 10 explosive picks. First up, AST SpaceMobile (ASTS) aims to build the world's first space-based cellular broadband network, connecting regular smartphones directly to satellites. Backed by AT&T and Vodafone, they've already had successful tests. ASTS is pre-revenue and burning cash, but if they scale, the upside is massive. Watch for satellite deployments and new partnerships. Under $5, it's a bold bet on global connectivity. Number 2 is Spire Global, SPIR, which operates a huge satellite constellation collecting Earth data, weather, shipping, aviation, and more. They sell this data as a subscription service, creating recurring revenue. With contracts from NASA and the European Space Agency, Spire is positioned for growth as demand for Earth observation soars. Competition is fierce, but their business model stands out. SPR is a data-driven play on the future of space. Third is Black Sky Technology, BKSY, specializing in real-time satellite imagery and geospatial intelligence. Their clients include U.S. defense and intelligence agencies, providing a stable customer base. Demand for real-time intelligence is rising, and Black Sky delivers insights within minutes. Heavy reliance on government contracts is a risk, but expanding commercial clients could drive growth. BKSY is a sleeper hit in space data. Fourth, Rocket Lab USA, RKLB, is a leader in small satellite launches with a proven Electron rocket and clients like NASA and the U.S. Space Force. They're vertically integrating, building satellite components in-house and developing a larger Neutron rocket. High development costs and competition are risks, but their track record is strong. Rocket Lab is a fundamentally sound space company. RKLB is a top pick for reliable growth. Fifth is Astrospace, ASTER, a high-risk, high-reward play aiming for ultra-low-cost, frequent launches. After launch failures, they've pivoted to focus on spacecraft engines, which are gaining traction. If their turnaround succeeds, the upside is huge, but it's speculative. Watch for new contracts and tech milestones. ASTR is a bold bet on a comeback. Sixth, Virgin Galactic, SPCE, is the face of space tourism, flying passengers to the edge of space. They've hit major milestones but face delays, safety concerns, and high cash burn. The investment case is a bet on luxury space travel. If they scale flights safely, demand is there, but risks are high. SPCE is a volatile, high-profile play. Seventh, Intuitive Machines, Lunar, is a leader in lunar landings, delivering NASA payloads to the moon. Their Odysseus lander made the first U.S. moon landing in 50 years. Multiple future missions are contracted, and they're building lunar infrastructure. Mission failures are a risk, but their track record is strong. Lunar is at the forefront of the lunar economy. Eighth, Redwire Corporation, RDW, supplies critical components like 3D printers and solar arrays for space missions. They're a key supplier to NASA, the DoD, and commercial players. This picks and shovels approach offers diversified exposure to the space industry. Profitability is still a challenge, but contract backlog is strong. RDW is a foundational play on space growth. Ninth, Momentus Inc., MNTS, solves the last mile in space-moving satellites to precise orbits with their space tugs. Technical and regulatory hurdles have hurt the stock, but recent in-space demos show promise. If they prove reliability and win contracts, the upside is big. Execution risk is high, so watch closely. MNTS is a speculative logistics play. 10th, Sidus Space, SIDU, is building its own satellite constellation, leveraging years of manufacturing expertise. Their LizzieSat satellites target commercial data markets. As a tiny company, growth potential is huge, but so is the risk. Success depends on launching and operating their constellation. SIDU is a ground floor opportunity in space infrastructure. So how do you invest? With $100, you could split it across these 10 stocks, about $10 each. Use a no-fee broker and track catalysts like NASA contracts or successful launches. Set stop losses to protect your capital and consider paper trading first. Remember, these are high-risk plays. You could lose it all. Do your own deep research and follow industry trends. Consult a financial advisor before investing. If you're excited about the future of space, like, share, and subscribe for more tips. Comment below with your favorite space tech stock or one we missed. Thanks for watching Mindful Mentors 12. Let's build wealth together.